Hello everyone, Dimitri from Gracious Interest here with today a new question, new topic. Topic being, why would you buy cryptocurrency versus mining it? Well, this can be simply answered. Let's start. Well, why would you? Well, for direct and immediate use, would you first buy cryptocurrency instead of mining for it first? Why? Well, cryptocurrency has distinct advantages over classic currency. People in finance, investors, or those who see this potential in its use. People like you and me, people in finance, etc. People who are associated, well, not associated, interested in cryptocurrency. What are some of these distinct advantages? Well, faster transactions. You can do it with wealth protection because most cryptocurrencies can be seen as an asset like gold, and gold is one of the best wealth protectors there is currently in the world. You have a high return of investment. To underline that, in a previous video I said that Bitcoin since the beginning of this year, namely the year 2020, has gone upwards with 80% in value. So if you got paid $100 in Bitcoin at the beginning of this year, that $100 in Bitcoin is now worth $180 in Bitcoin. So yeah, it has a high return of investment. High security thanks to the blockchain and its distributed ledger. Transparency also once again due to blockchain technology and distributed ledger. Now, continue. While mining is the backbone of any cryptocurrency, use is as equally important. Why? Well, you cannot create something without having a use for it. It has no use to, well, build a speaker, so to say, if music does not exist or if you cannot transmit sounds through it. Simple as that. Now, without use, the entire process of mining becomes obsolete. Fair enough. Because, as said before, no use in developing something when there's no use nor market for it. Now, in the best case scenario, buying and mining should happen on the same time. Why? Well, if you buy your cryptocurrency first, you may start trading and exchanging, and with its rising value, you might actually start, well, reinvesting your investment. With that I mean, well, for example, with the high return of investment that I said, the $100 at the beginning of the year, that now is worth 180. Well, if you take that $80 from in Bitcoin that has risen in value and you start putting it up, you might actually start buying proper equipment for mining. In the long term, by having bought cryptocurrency, you can reinvest the surplus you have in value to buy well mining equipment and start mining and sustaining and helping to develop the entire blockchain and network. Now, problem with mining cryptocurrency is the prolonged return of the investment, and not always a good move for those who have more of an interest in application and not so much in sustaining and supporting. What I mean with this is that the process of mining is something quite intensive and needs quite a lot of technical experience and know-how. Many people who are drawn to cryptocurrency do so because of its high value. They have knowledge of finance, but not so much about technology. They know that you have to buy low, sell high. That's the amount of wisdom and intelligence most people associated with cryptocurrency and trading have. When it concerns mining, there's a lot less actually, a lot less people who have this knowledge anyway. So also mining cryptocurrency is energy intensive and costly, as said before. Frequently there are investments involved as well as some technical experience and know-how which many people lack. See my previous remark. It is far easier to buy cryptocurrency and ride the wave to get a greater return of investment while foregoing the mining process. As said before, is complicated to most and demands calculations for return of investment over time. Frequently, this return of investment is going to be lower than opposed to buying Bitcoin and just holding on and waiting until its value actually starts to rise. Why is the return of investment lower? Well, That's because you are mining. It's because of the investment in equipment you need to do, as well as the costs of energy consumption of your miner. These are all things that need to be calculated and taken into accounting, as well as the fluctuating value of the cryptocurrency itself. So long term, for instance, if you buy cryptocurrency, like at the current moment, it has risen with 80%. If you bought $100 of Bitcoin at the beginning of this year, you now have 180. Now, if you did so with a miner, it might be possible you're still in the negative despite its increase in value and despite the investments made. Why? Well, there's your costs and initial investments. Those are things which need to be calculated on long term. And even on long term, it might be possible that your return of investments are lower. Now, the distinct advantage you will be having is that you will amass more Bitcoin. So there will be at some point a break even before you're actually going to make huge gains. Whereas if you continue to buy cryptocurrency to have higher returns of investment, well, at a certain point, those calculations are not very often made. You will actually be less rendable. So yeah, this was Dimitri from Gracious Interest. Hope you guys like this video and see you in the next one. Bye!